What is an order block? Order blocks are refined zones within an area of supply or demand. Most retail traders would look at the whole area of consolidation where they would expect a reaction in the near future. But smart money already has an exact level in plan, and we know that as an order block. Here is an example. Instead of using this whole supply zone and getting an average risk to reward ratio targeting this demand zone right here, go to a lower time frame and look for the last opposite colored candle before the move that broke structure. This is your order block. You now have a sniper entry with a small risk and massive reward. Check out my previous videos on supply and demand and break of structure. What are mitigation blocks? When an area of supply or demand is ignored by the price, that area becomes a mitigation block. Mitigation blocks are great for trend continuation entries. When price returns to this area, there's a good chance that the mitigation block will act as support for an uptrending price and turn into resistance for a downtrend, rejecting the price lower. What are breaker blocks? When an area of supply or demand is ignored by the price, that area becomes a breaker block, which signals a possible trend reversal. Price has to ignore the demand zone, breaking structure to the downside, creating a lower low, flipping demand to resistance or supply, which may push the price lower. The opposite for an uptrend confirmation, price ignores the supply zone, which turns into support, pushing the price higher. Check my previous videos on supply and demand and order blocks.